Bismillah Rahman Rahim. Assalamu alaikum and a very warm welcome to all of you. On behalf of the Al-Sadiq Institute of Islamic Banking, Finance and Takaful, I'm delighted to welcome you all to today's very insightful webinar. This webinar is the focus of today's webinar is one of great significance, that is implementing federal Sharia code judgments for riba-free banking. This is not just a legal or financial imperative, but more of a moral and spiritual endeavor, pivotal in creating an equitable and just financial system that aligns with the Islamic principles. Without further ado, I'm introducing our trainer. We are privileged to have here with us a highly distinguished trainer, Syed Muaz Shah. He is not only a legal academic, but also a certified mediator with over 6 years of extensive experience in academia and research. He has been instrumental in founding faculty or at the Ziauddin Faculty of Law, where he played a pivotal role in shaping legal education. He has also established the Center for Islamic Law and Rights, which has contributed immensely to bridging Islamic law with contemporary global challenges. His experience with such as the Organization of Islamic Cooperation further solidifies his and relevance for today's discussion. We are truly fortunate to have him lead us through this critical and transformative topic. So, without further ado, let's begin of exploring actionable solutions and insights for a riba-free financial future. Please welcome me in joining our esteemed trainer, Syed Muaz Shah. Muaz Shah Saab, please.
Thank you very much. I sincerely apologize for the little delay here. In fact, there is still some delay, but I thought I might just connect to start the conversation on today's topic. Thank you so much for the introduction. So today's discussion, of course, is an interesting topic at hand. I am actually not an Islamic banking expert, so I will start with the cause of Islamic banking and its development throughout the years. And in fact, those of us who are joined in this webinar may know or may not know, but modern Islamic banking actually was born in Pakistan in the 1980s during the time period of General Ziauddin. And there was a move in Pakistan at the time to Islamicize throughout the legislative process, various things, including the financial sector. And as a result, banking, some of the first modern Islamic banks started at that time. That model was then developed further. It went to Malaysia and other places, and it ballooned into what we see as modern Islamic banking. The hidden proud fact that all Pakistanis should have, a modern Islamic banking actually is from Pakistan. And of course, in Pakistan itself, when the regime of Ziauddin went and the movement toward the Islamicization of banks ended, there was still a gap that needed to be had. Now, interestingly, most of you may know about the 26th Amendment. And in the 26th Amendment, there has been discussion on the simple fact that elimination of riba was one of the crux that was added in by Maulana Fazlur Rahman's efforts, that was acknowledged. But interestingly, most people don't know, in the very first constitution that this country had, we had this same clause at the time when it was originally, the constitution was being put in place. So that's a continuation of that, you can say, spirit. And most of you must be aware, okay, when Quaid-e-Azam made this country, the one department that Quaid-e-Azam made in Pakistan, he inherited all the rest from the British, the railway department, education department, defense department. And thus, those inheritances continued and still continue to this day. But one department that he made was the Department of Islamic Reconstruction. And he made its head Maulana Muhammad Asad. And he gave Maulana Muhammad Asad 4 duties to establish a new constitution according to Islamic framework, a social system according to Islamic framework, an education system according to Islamic framework, and last but not least, an economic system according to an Islamic framework. These 4 objectives were the primary aims and objectives of the Department of Islamic Reconstruction. The reason I'm going to this small sort of historical start is to give you an idea that this isn't something that just happened in 2022, where the ruling of the Federal Shariat Court came into play. It's a long, drawn-out journey that has continued and is still continuing. Hopefully, we will achieve the targets in 2027, which the Federal Shariat Court has agreed that this is the time period for which we will finally eliminate riba in Pakistan. So continuing on this discussion, this December 2027 is the deadline for when this, hopefully, we will eliminate riba from the system in Pakistan. As a result, the Federal Shariat Court had advised many changes. And before we talk about the legislative changes and discuss that in detail, I'd like if we could, if you could scroll down just a little bit more, that there are some other issues that need to be identified. Number one, public debt management. The Federal Shariat Court, the directive that they gave said that Pakistan's massive public debt with IMF and various other parties has resulted, unfortunately, in interest-backed loans. And those interest-backed loans obviously are un-Islamic, and they don't have any credence within the Islamic economic governance or can be credited. So the conversion, for example, to sukuk-based solutions is something that the World Bank, IMF, they're exploring. And, you know, those people who know, sukuk-based bonds have now almost crossed 2 trillion a year now, as if like, so discussion, just so you know that in Pakistan itself, we are about to issue something with the government on green sukuk. So now that's integrating the eco-friendly considerations so that they don't cause damage to the environment. They're, you know, they have environmental due diligence. That is something that is also under the discussion of green sukuk. So, but public debt management is something that as a country in Pakistan, they have to have been and maintaining that. So again, sukuk-based initiatives that actually, on a local level, have been very successful. So the government sukuks, the government raising money from local banks through Mizan, for example, and to Islamic who are not already there. The market, as we know, about 70, say, conventional banks and banks now populate about 25-30% of the market. I'm sorry, I have internet disconnectivity for some odd reason. Can you share the, or in fact, now I can share it. So,
Masud, do you need assistance?
I don't know. I'm trying to share this document because it's not showing up on my screen anymore. So I thought I might just share it. There it is. Okay. Now hopefully you can see my screen. Okay. Okay, so going back, sorry about this, it's an internet issue. So the dual banking system is eventually projected by 2027 also to come close. So this is another major issue. The monetary policy management is also extremely important.
important. Now, the current monetary tools that are available, particularly in Pakistan and also globally in all the markets, the benchmark rates. So you have, for example, in Pakistan, you have Kaibor, you have Libor. Now, these are all based on products that may have not Sharia compliance. Now, this has been an issue that's talked about. My good friend, Mr. Siddiqui at Mizan, and wrote about this in the Dawn a few months back. And there was a development in the UAE sometime back in 2008 to develop a Sharia compliant benchmark, or what we call Islamic Sharia bench rate. So there is mechanisms that are available to utilize, but that hasn't been executed yet. And a recent gathering at the FPCCI, Mufti Taqi Usmani expressed this particularly. The benchmark rate needs to be further made Sharia kind of friendly. Now, he didn't say that the current setup, because it's just a benchmark rate, right? It's not the actual, you can say that un-Islamic or ghair Shari, or you can say anti-Sharia. It is actually Sharia compliant, but you can make it even more, you can say Islamic, for lack of a better term, or more accordance with Sharia, if you're able to create a benchmark rate not based on haram products. Because the typical benchmark rate does take into account those things in the pricing of haram products, which shouldn't be sold in an Islamic economy anyways. So hence this monetary policy management needs to be there, and the state bank has been efforts. In fact, they just put out a Sharia guideline for that recently when it's similar to IOFI, but it's good because it shows a domestic effort to developing Sharia compliance guidelines for banks. And I think that's something that shows a real interest from the state level to implement this. So we're going to see some changes in this and expect more as we come forward, particularly on the benchmark, which should be the next major thing that's going to happen, and hopefully it can happen before December 2027. Now, the last issue, which is also very important, is institutional resilience. Institutional resistance. Resilience. So institutional resistance, unfortunately, there is an absence of not only political will, but sometimes even commercial will. And I've had talked to some bankers, some senior management in some banks who are conventional banks, and they're trying to make our banking, Islamic, and they had some reservations about it. And a lot of those misconceptions, unfortunately, are done with because they don't understand the Islamic banking space. So there's a huge gap that is in the learning and knowledge base. I think the institution Al-Sadiq is working on, along with, for example, IBA's Center for Excellence in Islamic Finance. You have Ghazali University of Technology. They have a finance program, Islamic finance program. You have, not just in Karachi, but Islamabad, Lahore, multiple universities are now having these Islamic finance programs. The state bank is doing multiple trainings back to back to encourage this knowledge of bankers that, look, December 2027 is around the corner, and you need to understand this space. So when you're doing the conversions, like Faisal Bank has successfully done, this is a story. Now, a lot of the banks, of course, they've started dipping into the Islamic side by having Islamic window banking, but then to transition over entirely is, of course, it is a hurdle, and it will take time. But there is some institutional resistance to this. So these are five key, I would say, big issues that are challenges that are identified in this struggle to implement the FSC decision, which in some, like I expressed, there has been changes, but some are very looming challenges. And one of the biggest ones is about these IMF loans and other loans that happen in the state of Pakistan with foreign borrowing. So how do you convert them? How do we get out of the interest back? How do you do, planning for future borrowing? I mean, then it's, because particularly the Pakistan economy is so sensitive to this foreign borrowing element that making even an announcement and decision saying that we won't take no more loans and interest can actually cause a market impact that can be potentially negative. Because there's an expectation, we can borrow money from IMF and this on interest terms, so that's ever available. So there's, some sort of belief. But now if you say that now it is a state policy, we cannot do this anymore, Now it's like, oh, where they're going to get the money. And so this is actually an important kind of strategic, political kind of discussion, and we'll see how this pans out. But if we start working on it now, I mean, this is 2024, we still have 3 years. And Sukuk financing is something that we can look forward to. So there is a good chance that we can come up with a solution, but we need to work on it now. Now, the topic for today's discussion was mainly about the legislative changes that are suggested in the FSC ruling on the elimination of riba and interest from Pakistan's economy. Now, the Federal Shariat Court's ruling identifies actually specific laws that need amendment and repeal alignment. And I've compiled them here, and it's about a dozen of them that actually explains what it is. And this is the focus of today's discussion because I am actually an Islamic jurisprudence legal expert, and my focus is around the legal aspect to it. So one of the first laws is, of course, this very ancient law, which is the Interest Act of 1839, made from the time period of the British. And basically, this act kind of has the overall application of interest in commercial transactions, and this needs to be completely repealed due to the inconsistencies with Islamic principles. I don't want to go into detail. You can look up this act. The entire act needs to go. If I may also be bold enough to say, this act was made in 1839. So it was made in India that was occupied and colonized by the British. So for the academics who are with us in this discussion, this is also a decolonizational effort as well, that we need to remove these acts that are so ancient that are probably not for the benefit of the people of Pakistan or for the Islamic Republic, but were set up for the British to benefit them, who were the colonizers and occupiers. And this is something that I think broadly needs to be explored in a decolonizational discussion, and we can talk more about this when we discuss other things. The second one is the West Pakistan Money Lenders Ordinance in 1960. Unfortunately, this is still on the books, and it requires amendment to the elimination of interest-related provisions. Basically, the money lenders were allowed to have some base interest, which obviously is riba, and riba is to be eliminated. So these provisions need to also be eliminated, or the entire law needs to be reformed. There is Provincial Money Lenders Ordinance for Punjab, Sindh, Northwest Frontier Province, KPK, and Balochistan. And they're basically when West Pakistan in 1973 became Pakistan, the Islamic Republic of Pakistan in the 73 Constitution. So all these laws were then subjected on a provincial level. And so there similar amendments would be needed in that. So the other one is, of course, West Pakistan Money Lenders Rules. And basically, it's the rules to the same ordinance here. The revisions basically required to conform with riba practice. So this is all sort of just one kind of lump sum money lenders ordinance and the rules that are applied in that. The third major law is the Banking Companies Ordinance, 1962, Section 9 in particular needs to be eliminated, in which there's an interest-related provision that needs to be struck from there. So as you can see, a lot of these are very focused that there are provisions within these laws that actually account for interest to be acquired based on certain provisions. So they need to be eliminated. Another one is the Government Saving Banks Act, 1893, Section 10. Again, and look at that date, 1893. So this was not designed for the benefit of the people of the Islamic Republic of Pakistan, but rather for the benefit of the British Raj. And so again, these are actually, of course, government savings. Basically, you have a saving interest on that, and these amendments need to remove the interest-related provisions. You have the Negotiable Instruments Act, 1882. There are various sections here, Section 79, AD, 114, and 117C. They actually need to revise the terms involving interest on financial instruments that were instruments used by the banks when they're in contracts and so forth. And again, 1883, 81, again, decolonizational discussion needs to be had here. The Land Acquisition Act, 1894. Now, this act was designed in a way for the government to seize property for the benefit of the public. Now, there were, of course, interest-related clauses that were mentioned in there because usually the government compensates the acquisition of land that they've taken from the public. And again, this go back to the date, 1894. Again, I said decolonizational discussion, which is kind of, it's coming repeatedly, as you can see. So a lot of these laws were made in the British time period and not in the time period when the Islamic Republic was independent. And these, of course, are interest-related clauses that need to be revised or removed entirely. Now, in the Civil Procedures Act, and actually, in fact, it's the Civil Procedures Act, and there's three elements here. So just kind of reword this right here. Section 34, 34A, and 34B, and Order 37, and the rules related addressing interest on claims. Now, usually what ends up happening is if you go to court and you sue somebody for an amount of money, so the Civil Procedures Code is the overall arching code that governs civil claims in court. So in district court and high court, and you're allowed to ask for interest in the damages. Now, of course, in the elimination of riba, when you're claiming something that you're suing somebody, can you also request interest? I'll share a very interesting story that might sound very disturbing, but it was disturbing to me when I actually read it. But I don't know if most of the listeners know about Numan Ali Khan and Umar Suleiman, two very famous Islamic scholars in America. There was a small little disagreement amongst them. I won't get into the details of it, but Bayyina Institute basically sued Umar Suleiman. It's a very public lawsuit, and basically they had said many things in there that it said something to the extent that we're suing Umar Suleiman for using the intellectual property to give dawah. Well, that in itself is, I think, a ridiculous claim. It's like saying that you're giving dawah in a certain way, and that is the intellectual property of Bayyina Institute, which is, of course, a little bit ridiculous. When you give dawah in Islam, it's not someone's intellectual property. You can give it, in the best of ways. It's not how. But anyways, the interesting part was that they sued Omar Suleiman for an X amount of money, but then they also said that, as a result of this, we have lost monetary loss as an institute. We also want X amount of interest money based on that as well. And I wrote a very scathing post about that, saying that it's one thing to charge intellectual property on the right to give a dawah in a certain way. Chale, it will accept that. But to ask for interest, is that really Islamic or not? And I think that's something for us to think about often. And sometimes when we get into legal fights, we forget the Islamic principles of legal fights. That if you are even fighting a legal fight, you have to do it in an Islamic manner. And you can't do it in a manner that you can say that it is un-Islamic. Hence why that is that. So provisions on markup, lease, hire purchase, service charges to be overhauled. Now, any of you who are in Pakistan may looked at contracts. Let's take a leasing contract. There is a typical clause within the templates of leases that say that if you miss the monthly payment, then you have to pay X amount of interest on the markup for the next month's lease or the next month's rent or after 3 months or something like this. So these provisions and similar provisions like this obviously cannot be part of any Islamic economic system that contain that. So this Civil Procedure Code, again, 1908, was designed in the time for the British, and so should also be considered over that. Another one is the Cooperative Societies Act 1925, Section 59. And this also has interest-related provisions. Those who don't know, Cooperative Society Act is basically the housing societies. They are all registered in the cooperative society, and then people pay maintenance fees monthly. And so they have certain regimes in which the cooperatives can charge interest if, for example, you don't pay your monthly maintenance. So there are some interest-related provisions that also should be revised and removed from there. Sorry for this. The next one is the Insurance Act 1938. Again, I'm pointing to that date again to realize that it is before 1947 when Pakistan became independent. Hence, it is a British era law. Sections 3BB, 27, 29, 47, and 81 addressing interest rates and related financial structures should be removed from that as well. Now, the State Bank of Pakistan Act 1956, Section 22, and we're almost at the end here. This is to remove provisions on interest-bearing instruments like bonds and debentures. And of course, this has to be removed. And of course, the State Bank, it's interesting. I find it quite ironic. In 1956, in the State Bank of Pakistan Act, they would even have something like this. When Qaid-e-Azam gave the opening speech to the State Bank, in July 1948, very popular. Those who don't know, you can go to the State Bank's official website, go to the history link. You can read his speech. He says verbatim, I am giving directions to the State Bank to create an Islamic economic model that is not based on the capitalist or communist model that led to the world to go to war twice in World War II, World War I and World War II. So clearly, Qaid-e-Azam gave a directive to the state bank when a state bank was opening in 1948, his last, probably most popular, famous public speech before he got sick. That still you can find on State Bank's website. So again, it surprises me that a law that was passed in its name in 1956 should still have these type of interest-bearing instruments, bonds, and debentures. But again, that's for another discussion. But this needs to be also changed and amended accordingly. The Banking Companies Ordinance 1962, where again, Section 25 needs to revise to exclude interest benchmarks. Again, this provision deals specifically with benchmarking that needs to be removed. And the Agriculture Development Bank Rules 1961, which adapt rules to exclude interest mechanisms that are there for this bank that we have. And then Banks Nationalization Act 1974 with compensation rules to restructure to ensure compliance with Sharia principles when the banks were nationalized, UBL and others. And so these rules, the compensation rules in particular, needs to be restructured on Sharia principles. Now, with that said, these are the various laws. As you can see, there are about 15 some odd laws that need that. In fact, I should say there, I should have added that here. It's actually 14 laws in the various provisions for that, because Section 22 actually doesn't belong here. It actually belongs up here with this. So, which, I think this is something that a good comprehensive overview of the Federal Shariat Court's ruling that has resulted in what you can say clarifying the legal landscape that needs to change in order for us to clearly understand. So these 14 acts and laws, including rules, in fact, I should probably combine these as well, even though they're separate, so I will kind of leave them, but these need to change. Now, what about the acts that would be needed to further bring compliance standards to the elimination of riba? Now, one of the main things of Sharia in the contract law, if you look at one of the basic principles, is to eliminate uncertainty, right? It's a basic rule, gharar, you have to remove it from the system. And in order for that to happen, you need to have transparency, right? To eliminate what you can say, lack of clarity, you have to have transparency. So enacting laws similar, for example, to the Freedom of Information Act in the United States or the Financial Services Act of the United Kingdom, this will ensure transparency and efficiency in the system. Now, we do have a right to information, Article 19A. Unfortunately, Article 19A has been subject to politicization and it has not been as effective as it was deemed. So it was designed in a way thinking it will be very similar to the Freedom of Info, FOIA, they call it FOIA in America, Freedom of Information Act, but it has not lived up to that standard. There are many Supreme Court cases that discuss this, and just to give you one example, there was a case in which Hamid Mir, the famous journalist, he filed a case against the government of Pakistan saying that the disclosure of the government accounts dealing with the national security apparatus, particularly the ISI, should be public domain. In there, the court said, no, this, okay, yes, 19A is the right to freedom of information, but, and they came up with provisions saying that because of national security reasons, that can't be disclosed. Now, national security, of course, can be unfortunately abused, and in some cases it's genuine. And in this case, it might have been genuine. But the idea is that when you have that at a very early stage with the law, there is a culture that is born that, oh, okay, we could use this as an excuse to prevent freedom of information. And this would then not ensure transparency and not ensure efficiency. We have to create a serious fraud office to monitor and control financial malpractices. Now, this is, of course, also on the back heel, the anti-money laundering and terrorism finance. We need to AML-CFT, as they call it, counter finance of terrorism. Sorry, I'm breaking up the acronym, but the anti-money laundering scheme, which was the reason why we went into the gray list. So, and in FATF. So this is something that we are already focused on, but you have to realize that serious frauds office, unfortunately, because of some of the corruption cases, politically, the political corruption, I don't want to name names of any political parties, but everybody kind of knows the culture that's there. Now, because if you have fraud is a major anti-Islamic element that needs to be eliminated from any economic system if we are to make it Sharia compliant. So if you're going to enable NAB, then enable NAB. But as we know, that NAB has been subject to politicization, and it's created some conflicts. And then, of course, the provincial bodies of anti-corruption bodies, they're compromised in certain aspects as well. So this is a serious gap, and we need this supportive framework for this Islamicization of the economic system. The third is to develop regulatory frameworks for takaful, Islamic insurance and Sharia compliant investments. Now, this is also very important, as most of you know, takaful has also picked up. We talk a lot about Islamic banking. We don't talk enough about takaful, which actually has gained a huge share. And because they are not in a similar structure as the banking industry, that creates unique challenges and also creates unique opportunities. So Pak Qatar Takaful, and there's many others that are there in the market. They're, of course, examples for us. And of course, these have been set up, like I said, sometimes even earlier than the modern wave. But you have like modern companies like Salam Takaful and many others who have born. Even other companies have opened up, for example, Jubilee Takaful, even EFU was also setting up. So a lot of the insurance companies have to transition as well, state life and so forth. And this is going to be a challenge. So this has to be a supporting framework that's there. Now, of course, certain aspects of takaful are also offered by the banks as insurance schemes, life insurance, which you could life protection takaful, medical takaful, there are other aspects to it. So we have to be able to address all these because they run in a parallel economy that works with that. So there's a regulatory framework for takaful that's required. And state bank may not be the one to do it because you have to understand, banking is one sector and then you have another takaful comes out. So we're going to create a whole different insurance kind of regulatory scheme and we call it takafuli regulatory scheme. I don't know. These are things that we need to think about, but this supportive framework is necessary for us to create that. Now we talk about public debt management, going back to those three big challenges. We need to transform domestic and international government borrowings into Sharia compliant structures. Like I said, domestic compliance, we are well ahead. We already have Sukuk bonds. They've been extremely successful. I mean, I know it's surprising, but actually they get it on a lower rate, the government, so they like the Sukuk in one sense. And because one of the reasons why is that domestic trust in Islamic banks is higher than conventional banks, resulting in a faster growth in Islamic accounts. And because the Islamic savings accounts are ballooning in various banks, Mizan, of course, being one of them, Bank Islami, Dubai Islamic Bank, Al Baraka Bank, I'm forgetting the last one here, Faisal Bank, and others. And so what they're doing is this pool of money's coming in, and the government, of course, it's better to do local domestic borrowing than international borrowing. So we've created Sukuk bonds. They've been successful. They've also had their payouts. So we've seen a few cycles, and now government is even more interested. Like I said, recently, Green Sukuk is another one that you're just going to hear maybe next quarter. So expect in quarter 2025, we will see green Sukuk. As you know, green is a big thing these days and so forth. And I'm almost towards the end, so we'll be able to take some questions. And so, but the idea is to focus on asset-backed structures. So, but the question is, does Pakistan government have assets? And of course, a lot of people just say, you know what, the main big asset that Pakistan really has is land. I mean, one big example of the Pakistan government is railway. Pakistan Railways is the largest land holding entity in the entire country. The amount of land that is under the railways is what? Can we use that? Can we leverage that in Sukuk bonds? These are things that we have to explore that will satisfy international government borrowing. This is where we have to explore how Malaysia, Saudi Arabia, the MENA market, Turkey, they've tapped into this already to a certain extent, issuing sovereign Sukuk bonds that have picked up interest. And perhaps the market for this may not be IMF, whatever. It may be the Gulf. It may be countries like Qatar and Saudi Arabia and Malaysia and Turkey where we can market these Sukuk bonds because the Islamic investors would prefer, this thing. And I want to be very honest with you. Most people don't know. I mean, most who are here know, but most other people don't know. The capital of Islamic banking is London. In the world, more Islamic banking happens in London than any other Islamic country. And the reason for this is simply because Bank of England realized that this is an untapped market and they want a piece of the pie. And London is the major financial hub of the entire world, one of the major ones. And so they adopted Islamic banking long before. And that allowed a huge pouring of money from the Gulf countries until they realized that we should probably do the same thing, which now you see, mashallah, the explosion of banking also in the Middle East and the Islamic banks that are popping up there like Al-Raji Bank, for example. And those who don't understand the magnitude, Al-Raji Bank is probably the biggest Islamic bank in the world, if I'm not mistaken. It's like 5 times the size of Mizan. So yeah, I could be wrong on my assessment, but it's massive, and they've got like huge things. So it's very possible in this respect. Now, encourage project-specific sukuks. Now, this is very interesting too because sukuks shouldn't just be based on government and government loans, but you could do it on that. So, for example, you have dams, right? So you could create a sukuk for creating a dam or a solar park or a windmill farm. And these type of sukuks can also then generate new assets and reduce the dependence on that instrument. So project-specific sukuks can also be an area that can help in public debt management. When it comes to the insurance sector, takaful, we have to amend the Insurance Ordinance 2000 to incorporate takaful as a standard model for life and general insurance and take out the entire insurance as we typically know it and replace it with takaful. Now, this is actually a step that isn't as focused. A lot of the energy has been focused on Islamic banking and less on insurance, and that's why I keep bringing this up as very important. And the insurance companies are really, in fact, the head of it up there, and he's in the process of that. So you clearly see there's a transition for it. Everybody's kind of set this timeline that we need to prep for it, even if the law isn't there. So the Insurance Ordinance 2000 also is a sector within takaful that needs to integrate takaful entirely and remove the insurance fee. So we have to remove interest-based insurance products and provide regulatory frameworks, as I mentioned, as the alternative Islamic narrative. And not only that, but some of this stuff already has happened. I mean, you only have to go to IOFI. They have very good governance standards they've published. They've been working on them for many years. In fact, many other areas too. So takaful is one. They also have waqf. They have also developed on that. I'm working on a project related to waqf, which is also related to kind of Islamicizing the system, but that's going to be a little different discussion from that. In fact, I'll probably talk about it right towards the end if we have time. Monetary financial regulation, establish specialized departments within the state bank to facilitate transition to the Islamic system, financial system. This is happening. Training, NIBAF is on this. Other banks, banking associations, for example, Pakistan Bankers Association, everybody's tuned in, and they're providing these structures to kind of help facilitate this transition, to change the mentality that this is happening and you have to join the bandwagon one way or another. So that's part of that. It's continuing. State Bank just recently issued these guidelines on Sharia compliance, so that's something to look at. They asked for comments also, and so that's good domestic development on that. Development of profit sharing benchmark, like I said, to replace KIBOR, LIBOR. This is very important, and this is going to actually create a more Islamic benchmark, right? It's Sharia compliant already. I want to be very clear. Mufti Taqi Usmani said, look, it is Sharia compliant according to the fatwa because it's just a benchmark rate. But to make it more Islamic, how you achieve the benchmark, we should go for Islamic only products, which is something that can be developed and has been developed. Like I said, since 2008, that effort has gone on in the MENA region. So we can definitely implement a benchmark rate that is more Islamic. Introduce liquidity management tools such as Islamic money market instruments to support monetary policy under Sharia compliant framework. This is, of course, the management tools, liquidity. It's very important. You got to make sure that money can flow and money can flow easily. That allows the economy to then pump into gear. Tax and fiscal reform broaden the tax base to reduce the reliance on external debt. This is, of course, something the government is doing now. I know it's not a popular thing, and the increase of taxes, and of course, salaried. And that's not the only place that tax needs to be there. In Islamic history, if people read, land tax, agriculture tax was part of that. And that's something that needs to be seriously looked into. That has traditionally been a challenge because a lot of our political base actually has massive agricultural interest. So that becomes a challenge. But in order for us, even IMF has put out some stringent requirements that, look, you have to implement some sort of agricultural tax regime that is actually within reason. And I think, to be honest, some studies have proven that if we just do this, we don't even have to probably get any money from the outside. I mean, that's how, if it can be create a system that we can seriously take care of that. So we do need that. That's going to help the system, so we don't have to rely on international financing, which is mainly interest-based financing. But the growing Islamic interest-free international financing is available that we should also tap into. But like I said, borrowing is the last thing you want to do. You want to focus on how you can domestically achieve these targets. Provide tax incentives for business and financial institutions adopting Sharia compliant models. This is, of course, a progressive thing. In order for us to introduce the culture of Sharia compliance, we have to create incentives. So, like for example, transitioning to Islamic banking, this should be part of a scheme in which banks who are transitioning earlier than the deadline should be given some sort of tax incentives. That could definitely help. For example, or businesses who adopt Islamic tools, deadline, because what that's going to do, and I'm not saying that to just promote business, have to transition, and the government is not going to wake up one day on December 31st, 2027, and be able to just make everything Islamic in one go. It's over time. And so in order to create, you have to start clearly switch and don't create that havoc that everybody's, especially the Islamic, or would you say anti-Islamic banking people are screaming. They were said that Islam, rules, IOFI, and various other global Islamic institutions created these standards that help create the infrastructure that we see today that was not available 20 years ago. So these are challenges that we are addressing, and the voice against Islamic banking is slowly but surely all but disappearing. Example of the success of the trust and engagement with the level of growth that's going on. Not only Mizan, but other Islamic banks as well have also been able to achieve this level of trust. Initiatives to educate financial institutions, businesses, and public on Islamic banking practices, like Al-Sadiq is doing with this webinar, for example, these are things that help that. Global collaboration, look, engagement with the Islamic Development Bank is extremely important. That is your kind of international main partner, to be a partner that creates confidence in sukuk-based loans. So that's definitely going to be helpful. That'll help our sovereign needs on an international framework. And of course, they have a good research department that also has helped develop Islamic banking that also should be looked into for help and assistance and guidance. IOP is, of course, another one. I didn't list that here, which I should, because it is the most widely accepted international banking standards Islamic banking standards that are established. Establish international partnerships to develop consensus-based standards for Islamic finance and so forth. Now, insight for other sectors, and then we'll conclude here. Insurance. Like I said, I can't repeat that enough because it's not repeated enough. So we need to, maybe you should have a separate session on takaful and maybe get someone from Pak Qatar takaful or some other takaful to talk about that, or Salam takaful, on mandating Sharia compliance risk sharing models for all insurance contracts and how important that is. Capital markets. Now, they actually just had SECP hosted a conference on Islamic capital markets. Amazing conference they had here in Karachi. I think it was December 9th. Unfortunately, I was in Doha at the time for a conference there, so I wasn't able to attend. But I was able to read about what they had. And this is one of the things that we have to create, is we have to create Islamic-based solutions that introduce equity-based financing options as alternatives to bonds. And you have musharaka, partnerships, mudabara, profit sharing. And this actually connects into the last point that I have here is venture capitalists. Now, Islamic VCs have taken off in Malaysia, Kingdom of Saudi Arabia, UAE, and elsewhere, and provide an interesting potential to support the fragile framework of young entrepreneurs who are actually doing something and creating startups and the NICs across Pakistan. There is a real serious issue on small and medium enterprise businesses in Pakistan being financed through Islamic means. Yeah, I mean, unfortunately, that is, and the gap is huge because a lot of even the Islamic banking, I mean, if they're still connected in with the traditional models. And I'll be honest, Islamic banks, because they are new and they're challenging the conventional banks, they are more risk takers, trying out new things. And as a result of that, that has created these new opportunities. So, for example, what really picked up auto finance, or solar panel for your home finance. These are things that Islamic banks have actually pushed more so than others. And as you can see, that's created that. And it's all interlinked. So when we talk about creating more green, right, in Pakistan, Pakistan is the most climate affected country out of the top 10, bringing that revolution, part of it has to be done on our part. So how do we green it? So a good example, a very specific example, is the startup of Electra. Those who don't know, Electra creates EV bikes. And I met the owner, and he talked about Syed Muaz Shah. He said Mizan has been such an integral partner because it's helped people actually get EV bikes that they could not normally afford over a 3-year payment plan that typically no bank was willing to do. And so this actually, what's happening is Islamic banks are also part of the green revolution. And so, and when we talk about this type of finance, it moves the wheel, right? When you have people coming in, consumer wants to buy your bikes, it helps the business grow. Yes, we still have to work on the loans for SMEs, which is something, like I said, venture capitalists will do. And as everybody can see, we have Shark Tanks now. So that is actually more of an Islamic kind of system, but we have to ensure that that is also Sharia compliant. Those investments are not, interest-based provisions or put in those contracts or anything. So this is a huge area that can be done. So in conclusion, and then we'll open it up for discussion, the transition to a riba-free economy demands comprehensive reforms in law, governance, and practice, and the government must prioritize institutional capacity building, stakeholder engagement, and phased implementation. These efforts will lay the foundation for a sustainable Islamic economic system, aligning Pakistan's financial infrastructure with the Federal Sharia Court's vision. So I think I'll stop there and open the floor for questions. Or I guess I'll send it back to the moderator. Thank you very much. Sorry for the disconnection and slide.
No worries. Thank you, sir. We have few questions. First one was from Dr. Sohail. He asked the question, can you please share the tentative outcomes and challenges once the conversion is done?
Oh, well, that is of course there because
it's a $1 million question, actually.
Yeah, no, and it's a good question because anything new actually is something that you don't know what to expect. And you know what, Mufti Taqi in Urdu, he said that ye pehla marhala hai. And imagine this man has been working. He is the chairman of IOP and he's working for 20 years. He was in fact on the original judge on the case in 2002, 22 years ago. He is saying that abhi tak we are still in the first stage.
Yes.
And we are saying that we don't know it all. And we don't have this arrogance. And we want people to be part of this journey. And those people who criticize the Islamic banking is not really Islamic and Sharia compliant, he's saying, look, great, but don't add something constructive to the conversation. We want to make it more Sharia compliant. But to just say that no, it's not, and just throw it out, this is not the way to go. So trust me, there's going to be challenges. One big challenge, as I said, is sovereign financing, international financing. How do we do that borrowing? So, and those tentative challenges, for example, if we don't end up paying those Sukuk bonds payouts, we lose our assets, right? And is that something that we can sacrifice? These are going to be the challenges. For example, the extensions, right? You see, Abhi Pakistan, what's going on is they have extensions of loans, right? IMF, they ask for an extension. Saudi Arabia, can you extend it another year? UAE, can you extend it another? So what will happen in those case scenarios, when they come claiming for the assets? So these are going to be definitely challenges. One challenge, again, I'm going to say that is insurance is not as much of a focus, and I still feel that there's going to be that issue as well. And on a slight off note, I feel like they might even have a more kind of a crazy issue, but people are going to make it an issue that, why do we have Islamic banking for those who are non-Muslims in this country who don't want Islamic banking? I mean, that can also be an issue. You have to understand the law in Pakistan allows, for example, for the sale of alcohol beverages because of the non-Muslim population. And if this becomes an issue, like, some people may create it as an issue, then we're still going to have conventional banks, question mark, for non-Muslim population? I don't know. And I don't think that should be the case because there's nothing to say that you have an Islamic banking, it's forcing you to like convert or become Muslim. It's just a system. And why not have people who are non-Muslims participate in the system that is more secure, it's asset-based, it's not interest-based. In fact, some religions have similar values, like, for example, the Christian tradition. They're also against usury. But this is going to be definitely, I know it's going to be more of a vocal challenge than actual challenge in itself, but that can create a monkey's wrench. So I do see when the conversion is done, that might be a challenge.
Okay, thank you. Just a few words. As you have told earlier that London is a hub. Well, I disagree with this one. There are centers like Dubai, Kuala Lumpur, and Bahrain. They have larger Islamic banking. Emphasize that London excels only in specific areas like that of Sukuk trading and I believe is Islamic fintech.
No, you're
I
right
hope so.
about
I'm
that.
not
And
wrong.
when I was saying that, I actually was just thinking about Sukuk position as a major international financial hub. So yeah, you are right. You're absolutely right. And Alhamdulillah, the growth of Islamic banking then in London's growth. Because even though that is growing, but the level of growth
Yeah.
across Islamic banking throughout the Islamic years that even London has. So we are, well, inshallah, Umeed is there that you are going to create. And Bahrain, like, you designed or positioned itself as like kind of the center of Islamic banking, or put itself out there a lot before you have Sabatis based out of Bahrain, and you notice that they have a lot of. We recently had one here that IBA, Center for Excellence Islamic Finance, hosted. We had another one that was hosted as well. So Pakistan is also and should be a major hub because, like I said, we are the founding father of modern Islamic banking as we know it in January 1980. So we should be proud of that, and we should try to get back that crown, inshallah. It should be a healthy competition, and as we encourage each other to have.
Okay. Just quick last two sessions, though I really want to skip them, but I can't because they were really interesting. Whenever banking industry developed to Islamic, then government also need loans from majority of Islamic banks. What should you suggest for banks? How to deal with it?
I'm trying to understand, is this a government loan based question, or can you just repeat that one quickly?
Yes, government-based loan.
Okay, government-based loan. So government actually is the inside news is that they actually are very happy with Sukuks. And one of the reasons why is because of the rate, actually. And the rate is much better for them compared to conventional banks. And that's something that's why the Sukuks, government-based Sukuks, as you're noticing, they get oversubscribed. So there's a hunger also, like it's there in the domestic level. Now, internationally, that's the issue that we have. Like, you have to get Islamic Development Bank to be a partner on some Sukuk finance. Like you said, you have to get international partners. Maybe a Raji Bank is another place to look at. So some other Islamic finance, smaller market. So the challenge is for us, it's not going to be like an IMF loan or a loan from a sovereign loan from a country. But hopefully, like I said, in these 3 market has crossed $2 trillion. and that is a significant sum of money. And if I can put all of Pakistan's debt, in there, even if you put a portion of it, it can significantly be available because there is an appetite for it. There is an appetite for it. So it's just that it's going to take time, and we have these 3 years for that. And meri to umeed hai ki inshallah we will be able to achieve that position. But domestic taxation and control of your spending has to be done, and that.
Yes, it need to be curtailed, and it need to. Well, let's hope for the best. As we have improvement in Nigeria. Now the country is.
And also he's in arbitrary development as well. And you're right. And this is the step-by-step process, right? We don't.
It's going to happen. Not
we're doing. But these are things that all are actually going to have impact in creating that environment. And inshallah, through these efforts and support, mutual support with Nigeria and Pakistan, and I wish we could then offer sukuk loans to each other in the market and be able to create that market. I work for the Islamic Chamber of Commerce and Development, and basically we are the OIC affiliated organization that actually is responsible for the trade and commerce in the Islamic world. There would be nothing more lovely for me to see than for Islamic countries to be able to support each other in Sharia compliant initiatives that can support each other's economy. Because I'll tell you what, honestly, the reliance on China, the reliance on the West, the reliance on the EU to be able to give you these goods and imports when you have them within your brotherly countries, something that baffles me to this day. I don't understand why we don't have more trade, more commerce, more Islamic financing, and we have great products, but we just haven't created those channels. And I believe if we create these Islamic banking initiatives, they will have partnerships in the various Islamic countries that will create that environment for international trade between two countries. So that's hopefully also one of the positive aspects that when we see the growth of Islamic banking globally, inshallah.
Thank you, Mr. Muaz. Thank you once again, all of you, for joining us today. I'm really sorry that I'm cutting it short because we are running off time. And secondly, and most importantly, we have another class. So I sincerely apologize. I have to cut it short. And thank you, all of you, once again for joining us today. We hope this session provides an enlightening and inspiring, examples, embellished as he has embellished with good examples as well from across the countries, various countries. I'm sorry, I'm also stammering. Anyways, it's a very, very informative session. We are really very thankful to you, and I hope that we will work together in future to drive positive change in the realm of Islamic finance. Thank you.
Absolutely.
Thank you.
And I really apologize for the start and the small hiccup in between. Sorry.
Yes, it happens. Actually, my kids are also waiting for me. That's a hiccup. So I was also in the middle of something. Okay, thank you. Allah Hafiz. Jazakallah khair.